right, we are back with Barry Schwartz, portfolio manager at Baskin Wealth Management, and in all our conversations over the year, Barry, I've always found you to be very constructive, generally hopeful, and optimistic about the stock market. When you look at the current environment, do you see reasons to be bullish?
Always, because I play the long game, and I'm not interested in quarterly earnings calls and who is going to beat estimates. I'm interested in riding the right tailwinds for the long term and owning and partnering with the best businesses, the best management teams that know how to allocate capital and invest in durable business models. And to me, John, it's undeniable. People are ignoring how huge the AI boom is going to be and is right now. The future is here, and the spending on AI is boosting U.S. GDP dramatically, and we think it's just going to continue to grow as all the efficiencies and all the productivity that you're seeing from AI is just starting to trickle in for businesses, governments, and consumers.
How do you think about it in the stock market? Do you think that if AI makes us more productive and the economy does well as a result, that's just good for the stock market? Or do you think that AI allows businesses to be better and more efficient, so that helps their earnings? Or do you say it's going to just make the tech giants even bigger, and they've been driving the market already, so that's a reason to like the stock market?
I think you've already laid out what I would say. That's the three theses of looking at AI. Let's go back to first principles. Why do you buy a stock? You buy a stock because you hope that the company, the board, the management team will maximize profits for the shareholders. How do you maximize profits? Well, you look to cut costs, you look to increase efficiencies, you look to sell new products and services. Hello, this is what AI is going to do. Long-term could be bad for jobs. We'll have to figure out what other people are going to do. That's a whole other situation. But for now, you're seeing lots of action, of course, from the big tech companies. And this is one where it's really interesting. You would have thought that startup companies would come up with the newest ideas and be there. But it's, the Googles, the Amazons, the Metas, they're investing. They're going crazy trying to figure out how to be part of this, spending oodles and oodles of money. But the interesting thing is they're making so much money on their current businesses. So when I hear people saying, oh, this is the dot-com boom over and over again, hello, these are the companies today that are making so much money on their core businesses. If AI turns out to be a flop for Meta, who cares? Meta is still going to make a fortune on the social media business.
Yeah, interesting points there. And I have to say, just even anecdotally, I was at a conference this week where they were showing all these AI tools that even, for anyone who's in the financial industry who's watching as well, there's a lot of paperwork that goes into doing a job successfully. And, one view might be what if AI is doing the paperwork, that takes away your job. The other perspective would be if AI can help you do that paperwork, you can be way more productive.
Absolutely.
Than what it is you do.
You can focus on what you do best, right? I shouldn't be doing paperwork. I should be out marketing. I should be out meeting with clients. I should be spending more time researching and investing with stocks, not filling out compliance forms. And so if AI helps me with that, it's tremendous for my business.
Now, the market, first of all, the Canadian stock market trading around all-time highs, and I know you said earlier, part of that is the gold story, but the mood of the market after the early trade tensions has gotten a lot better. I think, people who are a bit skeptical might say, but is there economic uncertainty in the air? Data points always help, though, in making an assessment on the markets. And one thing that you've been looking at is the Wall Street projections on earnings growth. Now, in light of the uncertainty, you might think those were going down, but what do the numbers tell you?
So this is yet another reason why you have to ignore what the doom and gloomers say and focus on what companies are saying. That's the most important thing for me, is I focus on what our companies are doing. Wall Street has nothing to do with the regular, day-to-day economy and Main Street. S&P 500 is arguably the greatest collection of the best businesses ever created in the world, right? And so you're seeing many of them ride this AI boom. You're seeing the U.S. consumer still spending very strong. You're seeing it in the results of Visa and MasterCard, American Express. You're seeing the retailers like Costco and Walmart steal market share and report strong comp sales. We're in a bull market. I'm sorry people don't understand it and are focused on worries that are really not that material to this economy. Things are happening this year that no one would have expected. How in the world are we at all-time highs? How is the Canadian dollar up 7% against the U.S. dollar? This makes no sense to the rational investor who would have thought the markets would be down in a correction or 10 or 20% this year. But it's all about earnings, John.
When you say bull market, I think about those classic definitions of what a bull and a bear market is, and then there's this new definition of what this market has been, courtesy of a journalist at the Financial Times who called the back and forth of the market in light of the trade headlines the taco trade, kind of going up and back and up and back. Do you put any stock in that? Does it look like a different, up and down, but ultimately up market than what you've seen before?
I've been telling clients the playbook of Trump 2.0 was the same playbook as Trump 1.0. He's going to try and bully, he's going to try and muscle, show how tough he is, but ultimately it's all going to lead to nothing. I always was telling clients, do not worry about the tariffs. It's not going to be a major impact for your portfolio. We got rid of a lot of manufacturing companies in our portfolio, exposure to tariff-related businesses. Guess what? It really didn't help because everything got killed in April anyways. But the bottom line is I think Trump delivered the bad news. Hopefully we'll get some goodies as we head into the rest of the year. I'm really positive on where inflation is going. Interest rates are probably going to come down. These are positive things. People need to remember that the market is wonderful at climbing the wall of worry, and the market doesn't need good news to go up. It just needs the news to get less worse.